Welcome to the on-chain analysis for beginners class with eki.btc. In this quick series of lessons, you will learn how on-chain analysis can give you an edge in predicting the macro trends within Bitcoin's price action. You will quickly understand how Bitcoin's network transparency can provide traders with a competitive advantage that can't be ignored. Because Bitcoin is not like every other financial asset. When trading traditional markets, traders must rely on fundamental analysis, such as news, interviews, product launches, financial statements, and more, as well as technical analysis, which is mainly an evaluation of patterns and trends concerning market prices, volumes, and indicators. Both of these types of study are relevant to Bitcoin trading too. However, the blockchain's transparency allows us to see things that simply can't be seen in any other market. With Bitcoin, we have access to every single transaction ever made, the size and history of every wallet ever created, the nominal price of every Satoshi ever moved, and much more, all thanks to on-chain analysis. We already identified the most important on-chain metrics and how they can help us trade from a position of strength. So listen up and make sure to take notes. We'll explain every metric first, before translating it into a trading strategy. So you know what we were talking about before you jump into applying it. Lesson 1. Realized capitalization, also known as realized cap, is an on-chain metric which aims to express the total value stored on the blockchain. It was first introduced by Coinmetrics to respond to the inaccuracies of market cap. However, it doesn't completely deviate from it. It's considered a building block of on-chain analysis as it paints a data-driven picture of the blockchain's total worth. Realized cap de-emphasizes the impact of lost coins on its total valuation. It filters out emotion and speculation. It is a pattern of scarcity due to the lack of volatile fluctuations, and therefore it is more stable and predictable than market cap. So, how is it calculated? Well, quite simply, this metric measures the value of all existing coins considering the historical market price of each individual wallet's last transaction. Therefore, instead of multiplying each existing Bitcoin for the same nominal price, each Bitcoin holds the value it had the last time it moved. That's why realized cap is considered to represent the total amount of value stored on the blockchain. Market cap, on the other hand, is calculated by assigning every Bitcoin the same value, exclusively considering the present market price. Of course, both market cap and realized cap will always move along with market price. However, the realized cap's fluctuations will always be more contained due to its more stable nature, while market cap will always be a more shallow valuation that ignores price history, as well as the amount of coins that are actually moving. When using on-chain analysis as a tool for trading, the overall trajectory of realized cap, as well as its deviation from market cap, can give us important signals for identifying the best times to buy and sell Bitcoin. In the next lesson, you will learn how realized capitalization can be used to predict market cycle tops and bottoms in order to give us a competitive advantage in identifying opportunities to accumulate Bitcoin. It is important to understand the underlying nature of realized cap, because it is reflected in many more on-chain metrics and indicators that will be explored throughout this series of lessons. Concepts such as realized price, realized value, realized distributed price, and many more. You'll know where to find this data, what it means, and how it can influence our decision-making and market assessment. So if you understood the underlying nature of realized cap, and you are ready to use it to your advantage, we will see you in the next lesson.